Hi, I'm Garth McKenzie from traderscorner.co.za, and this is your weekly look at the S&P 500 and the Nasdaq indices. So as always, I start with a look at the S&P 500 daily chart. And what's interesting to note here on this chart is that this market has finally managed to push up, and it's got a 4 handle in front of it now. The market broke up above 4,000 at the end of last week, and yesterday being Monday, we saw the market pushing further into all-time high territory. So that move above 39.80 was really the breakthrough technical resistance that's got the market moving up, and you can see it's almost begun to melt higher now. Now, from a target perspective, the area around 4,150 is where I see some resistance coming in. And interestingly, that also would actually be a 161.8% Fibonacci projection of the recent pullback that we saw into early March. So quite a significant area there. And I think if the market were to get up to that 4,150 area, that's where we could maybe expect a little bit of consolidation to begin to emerge. So keep an eye out on that in the days ahead. And also do note that gap in the chart there at 4025. If the market were to start to stall up at those higher levels, then perhaps we see an ultimate retracement down into that gap in the weeks ahead. But overall, still a very bullish looking chart setup here. It's above all the moving averages, making new all-time highs. So nothing really not to like, albeit that it is starting to get somewhat stretched as it approaches that resistance area at 4150. If we then look at the hourly chart of the S&P 500 here, you can see the recent trading activity in a little bit more detail. There's an inverted head and shoulders pattern that I've labeled there on that chart, and the break above 39.80 validated that inverted head and shoulders pattern, and that projects up to a target of about 4,100 or just above. So it kind of ties in with a similar area to what we spoke about on the daily chart. Also there, you can see that gap that I pointed out on the previous chart. That gap comes in at 4025. So if we were to see the market consolidate and retrace some of these recent gains in the weeks ahead, then it's possible that that gap might become a target on the downside once some consolidation begins to take place. If we then turn our attention to the Nasdaq 100, what's nice to note here is that this market has also made a bullish break above 13,300 is the bullish break there. I highlighted that resistance area last week and said that the market needed to get above that if it was going to make an attempt at the previous. So it's done that. You can also see that this chart is quite gappy as well. It's got big gap ups into the end of last week and another gap yesterday being Monday. So it's looking quite stretched, quite squeezy on that respect, but that break above 13,300 could in fact see the market go and retest the prior high, which was up at 13,800. And if we then did see some consolidation after that, then possibly those lower gaps would become targets after that. But for the moment, whilst above 13,300, one's got to give the bullish bias the benefit of the doubt here. And then finally, let's take a look at the hourly chart of the Nasdaq 100. There you can see the significance of that 13,300 level that I mentioned, and that's the resistance level that was broken on yesterday's trading. Notice how the market gapped up through that resistance, which is a bullish gap to the upside. So in all likelihood, it does open a move up to the prior high 13,800, and that region around 13,300 should probably be support into any short-term pullback from here. So overall, generally a bullish looking picture for both the S&P 500 and the Nasdaq at the moment, albeit that S&P 500 does look as if it's going to push up into some resistance fairly soon. That's all I've got for you this week. I'll be back again next week with another look at the S&P 500 and the Nasdaq indices.